All right, check 1, 2, 3, 4. You guys able to see the screen okay?
Yep.
All right, fantastic. So I'm going to take a buy from this level, see if price will get a pushback up here. What we're going to do is, while I do this, I'm just going to show how to do a stop loss real quick so you guys can see how to do it if you don't know how to do it already. When you are in a buy, okay, and we're already entered in, I'm going to go down below the buy level because this is where it would invalidate. And I'm going to put a stop loss down in here, a little bit below. And I'm going to go to trade, sell, stop. See how it says sell, stop? So we don't want a limit. We want a stop. And we don't want a stop limit. We want a sell, stop. So if price was to come down and hit that, it would close it out automatically, okay? If you were to put in a buy limit like this, when price hits that, it's actually going to enter another position, is what it would do. Okay? So that's how you use limits and stops. Now, the same way, if price is pushing up, and I was like, I want it to just close when it gets to a certain level, what you would do is you would put in a sell limit in this situation because we're in a buy, so we're buying. If it hits the sell limit, it would close us out. Okay? So I don't personally do that, but that's the way you can use sell limits. I do use stops all the time. If you're in a buy, use a sell stop. If you're in a sell, you use a buy stop. Okay? So we're just gonna let that run for funsies and just have that in for a potential maybe a pullback up to this level right here. In fact, let me just look on our Lux algo indicator and see what it says where we would potentially back up to this level. So if price is going to come back up, maybe about up in here. Okay. All right. And so what we would do is you would maybe right below this level, because price will get close to it. Maybe right at the bottom of that level, I'll put a sell limit. So that way if it hits it, then it will close out the trade in profit. So there you go. This is an example of a overnight position that we are risking. It's a 1 to 1.6 to there. If we were to go lower to here, it would be a 1 to 2. Let's just make it an even 1 to 2 right here. So I'm going to move my sell stop up. This is on micros, so my sell stop is at 2532, I believe, 2532. And my sell limit is at 2791. And so we'll just let that ride and see what happens. I'm going to move my box. By the way, this is just so you guys know, so you have the tool. Under projection tools, a long position means buying, a short position means selling. And you'll see it gives you this box. You put this center line right where you're entering, and then you can move the red box down or wherever, and then you move the blue box up wherever, and it'll show you what your risk to reward ratio is in the market. This is really good for swing trading. For scalping, it's useless. We don't care about this at all, but for the purposes of this, it works just fine. So this trade, we'll see, let's see, that's 5:30. So 3 to 5:30, another 2 hours beyond that, and we'll see what happens in this time frame here. Okay, now let me close down our support and resistance indicator, and let's dive into this. So we covered direction. Direction is determined by our thick red line or the blue line right here. So blue line is buying, red line is selling. You only go in the direction of that. You never go against that, ever. Don't go against it, okay? Now, what we're going to do, again, the other thing we're looking for is if you are so fortunate that you are near the red line or the blue line and price pulls back and gives you diamonds or gold coins, you're going to take a swing position. So this is an intraday swing position. So it's a position for the day. You're going to take that. Your stop loss is going to be way up here, which means that if you're 234 ticks away from your stop, it means that you need to have a much smaller lot size to be able to capitalize on that big position, because the farther you are away, the more money you're risking. So you need to lower lot size to where it still makes sense, and you're within your risk tolerance. But then you're going to get trades like this where you take that, and if you came back and checked this at like 1 p.m. in the afternoon, you would have been looking at price way down in here, which is fantastic. And you probably would have closed somewhere down in here if you came back at like 1 o'clock in the afternoon. You can take these trades and just let them ride, and you might make money, you might not. Some days you might have like this, like you take this diamond here, and eventually it just invalidates you, right? You get stopped out if you didn't take anything at this gold coin. So you're going to get days like that, but you're going to get days like this where you make a lot more money than what you lose here, right? And that's what it's all about. It's about risk to reward and winning either the same amount that you're losing, but you make more money when you win, or winning more than you lose, which is what Pathfinder right now, by the way, if you only take trades in this direction of this red line and you take them on the gold coins or the diamonds, you have about 70 to 75% win ratio overall doing that. So if you come, show up, do that, take it from gold coin to gold coin or gold coin to diamond, take a partial at the gold coins, leave the rest, that kind of thing, or like put stops above these, you have a 70 to 75% win ratio, which is legendary. It's really, really good. So let's dive into it. We're going to back test. We're going to go back. Here's Friday, Thursday, Wednesday, Tuesday, Monday. All right? And we're going to take a look at the market and see what is going on. What did we get in the market? Now, this particular day, when you show up here, I want to show you guys something. There is a line that's on my screen that you guys don't have, but it's in congruence with, or confluence with, did I just grammar myself again? Hold on. Definition, you're getting the full gram right now. Definition of congruence. Someone is probably like an English professor on here.
I know what you're.
It works. I got it by accident. In agreement or harmony. Yes. Confluence and congruent. They work. They both work. I love it. Okay. Very good. Okay, so this right here, if you guys look at this, so we're only buying, right? We're a long ways from our blue line. Price is going up, and I want to show you this. Do you guys see this little white line here? You don't have this on yours, but this white line right here, you'll notice it's congruent with the trend indicator. And what this is any time that you are moving upwards and your line is pointing upwards in a buy and price dips below that top line. So you can see it here as well on your trend ribbon. See that like darker line right here? See this little blue line right there? When you're in an uptrend and that line is pointing up, not sideways, it's pointing up, and price crosses below it, take that trade every time. Right here. Take that trade every time. So we're on micros. So right here, if we were to have bought 15 micros, and we press the play button here, this is what profit you would have seen. Off she goes. Good, about to get a bump up right there. So $262 here is probably closer to $300-400 up here. We also have the previous high right here. Wisdom to take profit at the previous high, by the way. So when you get to areas like this right here, previous high in the market, all right, you take some profit off the table, all right? Sell some of that profit. Whether you get a gold coin or a diamond or not, when you get to that previous high, in this scenario where it's like a pretty decent push, how many ticks? Yeah, 35 ticks. This thing pushed up over 50 ticks. You take some profit. So we take some profit off the table. All right, we've secured $175. Our stop loss, by the way, stays underneath that cloud. And then price continues with a pullback.
Hey, Graham, sorry, I don't mean it to interrupt, but
No,
is
go
it
ahead.
possible that the settings in the indicator are different? Um, sorry, my kids are yelling. Are different because uh, like that candle where you entered
Mm-hmm.
on mine, the candle does not close in the ribbon. It doesn't
Are
go
you
below the ribbon at all.
are you sure? Are
I'm
you
on,
on micro E minis Nasdaq?
I am on micro E-mini.
Okay,
It wicks through right there.
gotcha.
758, right?
Yeah, 758. Yep.
Yeah, it wicks through it, but the body of the candle never goes into the ribbon. I
Okay.
can take a picture if you want.
Do you have? I believe you. Do you? Is the closing price on that candle 21,325.75?
21 yeah.
Okay. So same. So it's possible. I can take a look at the algorithm and make sure it's exactly the same for you. I have
Hmm.
mine. The discrepancy could be I have mine invisible right now, and I have another one overlaid over top of it.
Okay. Yeah,
Okay.
that might be it. Cause it where it closes is like right on top of the ribbon.
Gotcha. Okay. So it closed on top of the ribbon for you.
Yeah, like on the same line. They're basically identical.
Interesting. Okay, yeah, I'll take a look at the script before the end of the call, and we can take a look and see.
Okay.
Um, so that's no problem. Actually, you know what? Let me see. Let me add another one to the screen right now, and let me take a look here. It's possible because it's EMA versus SMA. So yours is looking like this, correct?
Yeah.
Okay,
Yeah, it
gotcha.
looks like it.
So that's the problem is that it's currently set to EMA and it needs to be SMA. So I need to fix that.
Okay. Well,
So
we can do that ourselves too, yeah. Just go change it to SMA.
I believe you guys can come on here. Yeah, you should be able to come on here and change it to SMA, and you see the difference there. And
Yep.
here's why this
Yep.
is really important because the SMA, you'll notice that it's still it's at an angle pointing upwards.
Hmm.
If you go to EMA, you'll actually see it looks like it's going more flat.
Yep. Yeah.
We don't want that. We want it to show that it's still an upwards angle like that.
Yeah. Okay.
So that's the difference with that. So I'll leave this on. So make sure you guys have it set to SMA. I will physically actually change it in the algorithm. Like I'll go into the editor and I'll get it set up so it's correct for you guys, because that's what you want to see. Anytime price, like back here, see how price pulls back below that steep incline? Price is going up and it's giving you an entry right there. Boom, smack it. And then look at this, immediate profits, right? Again, pulls back, smack it, immediate profits. Now look at this current candle. Do you see how this has now gone flat and it's turned? Exit out of the trade. Exit, right? When you see this. So you guys can see this. I mean, you'll see my body of the candle is not very transparent. There we go. Okay. Now you can see it. See flat, and on my white line, which is the line I actually care more about, that you guys don't have this on yours right now, but I'm probably going to add it because I would say it's arguably even more important. But the trend cloud is really important for showing you when price is going to turn around. This right here, though, when I see this thing pointing down, I'm out of the trade. I'm out. So this is what I'm watching for. So you can see here price after this, I believe it starts turning. So there you go. And dropping, and dropping, and dropping, and dropping, and dropping. Now, if you take these diamonds and you take them and you're holding the position, like you're holding a bigger position, I don't think this thing ever turned around. I don't even think my ribbon started pointing upwards again. It went kind of flat here. It went semi-blue here. At this point, I would have had a stop loss below here. So if you went for a smaller position on your diamonds, and which is okay. You remember you want to reduce position size on these. So you reduce your position size, you get in, you let price keep pushing, and then this thing gives you a bottom and it flips over to blue from there. That stop loss goes below here. Okay? This thing continues down, stops you out. Not a great sign at this point. The only thing that you would do to get back in is if it gave you another signal, or if you just automatically take these trades when they get down here near the blue, which I like to do, and I go risk-free on this. So if I get this position right here and it pushes up and all that, I'll go risk-free, and then price continues, and this thing now switches to sells. Now, guess what? It's given us opportunities to get in. So guess what we're going to do? When price pushes up over our line, we're going to take a trade. So you can see this is what we want. See how it's like pushing down? We're just waiting for that opportunity. Okay, here comes the opportunity potentially. Let's see. All right, right here. See this? I'm going to take this. Now, if this thing decides to close up and over and this line starts to change and it does not remain pointing down, I'm getting out of this trade, okay? So let's see what it does here. Pushes down. This thing is now going flat. It's still valid, but this candle closes over. So once that happens, I'm just out of the trade. I'm just getting out. I'm not going to stay and play in that. And you gotta wait after that. So you want to wait to see what the price is gonna do, and not rush the trade. Now, here's the thing, guys. At this point in the day, I'm already past my trading window. Okay, and this was Monday. So there was a trade back here. That's a win. You take a partial there. If you took this, you would have gotten stopped out down here for a small loss, probably less than what you actually entered here. So maybe you were break even, and then this thing didn't give any other entries except right here we were blue. It did pull back, but this is flat in here. So you can see this is still early. So these are not the best trades that we're looking for, okay? These are the trades. When it is angled like this is where you load up. When you're flat, the trend has not yet started. So even though it flipped, pulled back, you could have taken a small entry in here, okay? And then when price closes here, you just get out, okay? So if you took a buy right here, which would be perfectly fine for you to do, you take a smaller entry size. You're looking to get this thing set up to then take off and run, and then we will add more later. That doesn't happen. It flips, closes, you get out. Not a good sign. So price continues, reverses. You can see here, scalping to the downside. There was tons of entries on this thing, but you're only looking at these buys. So you're probably not taking anything. So you just sit on it, and this overall on the daily basis is either break even or maybe small loss for the day. Especially this is outside the trading window, so you probably didn't take this if you're showing up like I did to the market. Okay. So there's day one. So we'll count it as a small loss on the day one. That's no problem. All right, now I'm gonna speed up time significantly. Painting 10 candles. And price just consolidated a whole bunch. That's just a lot of consolidation. Valid right here, so valid entry, that would have won. This would have won. This one would have won. So all sorts of little scalps in here. You guys know scalps are quick trades. It's like in and out. Like price pushes back down to the equal low and you exit. Maybe you hold some in case you get a gold coin, but a lot of times I'm just taking a full exit on the scalps. Right here, another perfect example of a great trade. Price is pushing up. You can see your line. Momentum is up. Price dips below. Smack the crap out of that trade. Smack it. All right? Great trade. You take it. All right? Let's see here. Any of these. This one right here. Here's another little scalp. This is what it looks like before a trend has started. Remember I was saying you lower your position size, give room. trend takes off in your direction, and right here it dips below the line. It touches that brighter blue line, which is where you want to aim for, and then pushes back up to equal high. You could take profit right there. Perfect example. Here's an example of what it looks like when you lose a trade. So price is pushing up. It is still aiming up. Price comes below it. If you take that entry, it never comes back up here to equal high. Instead, it closes below right here, and it's flat. So it starts going flat. Right, even right here. If this thing pushes up and you're just flat, just get out. We want to see momentum. We want momentum. Okay? We want to get in with momentum. Even this right here, we have momentum. Let's keep playing. So let's see. Kind of zoom out here so I can find out where we are. This is evening time. 8 o'clock. Oops, we don't need that. $10. So we're just waiting for the time frame again. $1. Price doing its thing. So here we go. We're getting closer here. 6 o'clock. I tend to show up to the market about 7:30, especially lately with daylight savings time. Like I'm already on the market by this time. So let's take a look and see what's going on. All right, are we buying or selling? We are sells only here on Tuesday. And would you look at that? We are now going red, so we're looking for sells. We've slowed price down. And what we want to see is, there we go. Looks like we're trending. We want to see a pullback over the line, at which point we will then take a sell. Right there. So let's take that. And let's see what happens here. Still valid, still valid. Still pointing down, still pointing down. Right here. Do you see this? It turns. And it closes above. We're out. Just get out. Okay, deeper pullback coming. And where are we in regards to the line? Are we like near it? Are we a ways? We're kind of a ways from it. So I'm not super keen on these gold coins and the diamonds from here. Potentially a valid trade for a smaller position. So let's see if we were to take a smaller position, what happens here. How much risk is that? It's quite a bit of risk, so you're risking a lot depending on your account size. Risking a lot at that lot size, so you'd have to lower it. You would lower it a bit, maybe we close 2 of it. So that would be acceptable. The thing that I don't like about this is that when I'm not near the red line and it pulls back and I'm already risking $400 at this lot size, I'm like, you can't really add more because now you're risking a lot more than your max tolerance. My max tolerance is like maybe $500. So I don't want to risk more than that. So it doesn't allow me to get another position. So I'm not super keen on taking something like this. I'd rather sit, wait for the trend to happen, and then get in like a scalp or get a trend trade, you know? It's just a little bit far from where I want to be. All right, now that did pop a diamond. So let's see. This looks like trend is going to switch to a downtrend. This pulls back into the cloud. Right here, it pops over the cloud. And so I'm going to load up a position. Oops, I forgot we only need this to be 5. There we go. All right, and let's see. Price immediately pushing back down. This is what you want to see. Within 3 candles, 3 or 4 candles, it's still aiming down. We're still pointing down. We're going to stay in that trade. Now, see this? See how we start closing above? So it closes above and it switches. We're going to get out of that trade, okay? So we're going to exit. Don't want to be in it. Now let's see. We're at 8:20. Was there news? So let's take a look at Forex Factory. This was Tuesday, correct? So let's take a look back at the news. Tuesday, and we had no news at 8:30 a.m. Nothing. So this is looking a little cleaner. We do have this level it's tested several times, but again, we're still just so far. We're still so far from here. See, like that's more reasonable. Even 200 and something would be reasonable. Like that would be fine, but not more. We want to leave some dry powder. You guys know what dry powder is? If you go hunt with a black powder rifle and you got this dry powder that's ready to go if you need to load up and fire a shot, we want to leave some in the ready to go, because if price pulls back up here, I want to get in a little bit better position. Still willing to risk like 500 total, but you can't take a full position down here, because if this kind of stuff happens, you can't get in. All right, now if price switches back below, which it is, and we go red, and we're aiming down, and it gives us another trade, guess what we're going to do? We're going to smack that thing, and we're going to load up. So here we go. We're watching. That position is now back in profit. But look at this. Nice and steep. This is good. Steady trend. Give me a pullback. Okay, so right here we have a pullback. Now, you would have gotten in a little bit higher up than what we're about to do. I was a little slow on that. And if I press the select bar and go back one, it'll erase the whole thing. So I'm not going to do that tonight. But we are going to load up here. So I'm going to get my full position. I'm now in a full position. Remember, I was reduced risk, and I'm in a full position almost exactly where this was. It's just a little bit lower than that. So full position. Again, if it switches on me again and it doesn't continue, I'm going to get out. Once it pushes down into here, I'm going to take some partial maybe. Right there. We're going to take some money off the table. Good. We're just going to let the rest run here and see. And this one, it looks like this thing pulled back in here. You can see our line starts to go flat right here. I'll zoom in. So you can see this starts to go flat. And then from here, you can see this closes up above. So we're going to close that. We took some profit here. And then we're going to see if it's going to push up, give us a new position. It gave us a gold coin on this one. So you can see we're at negative 332 so far. And this one I'm going to press the replay button on. So this one, let's slow it down because we would have taken this. And it would have been a reduced position size. I'm going to go to 3. No, stop it. I'm going to have to cheat this one here a little bit on the system. So when it gives this gold coin in here, this is where we would have... Oh, it's not even going to let me cheat it. That's such a bummer. Let me like super slow it down and see if it'll let me catch it. It happens really quickly in here, so I don't know that it's going to let me hit it. No, it doesn't look like it. So obviously this up in here, guys, you would have taken this. This clearly pushes down and it would be a win. It's just when it comes to doing this with the instance, it doesn't quite, I don't think it's gonna let me do it with the replay, but we would have taken this. So here's our gold coin. And so somewhere's in this wick we would have entered for sure. Lower position size, and you would be in profit right now. Here's what I'm going to do to cheat this. Right here we would have entered at this same exact level. And then let me speed this up. I'm just going to cheat the system here so we can get an accurate representation. So there we go. So now you're in profit, but you're not doing anything. This is still, we're looking at the position for the day. Obviously, this is a little bit higher than what it would have been. So you would have been in this wick somewhere for an entry. What we're looking is when this thing comes back here to this to the cloud, we're going to take another position. So let's keep looking here. Unless you hit a gold coin. If you hit a gold coin, you take some profit. Okay. If you are holding this for the day, then you wouldn't. You would just hold it. Okay. You would hold it and you would hold it risk-free. So you're not risking anything. This, if we look at this right now, this does push back up here. This is the 933 candle. So 930 happened, gives you a nice gold coin. We took it, it pushes down immediately. And in here, 933, it wicks over it and it's still pointing down. So you might have added a position in here. Let's just say we add a position and then we go risk-free on that in case it pushes higher. I've now doubled my position size. I'm still risk-free. And if price continues down, you're going to make money. So let's see if we get stopped. We do. So it stops out and it flips. That's why you do that. So we just get stopped out. Up here, we get another gold coin. Let's re-enter again. Now we're closer. So look at this. Now I can actually increase my lot size. So I can start with 6 contracts. The closer you are to the red line, the more contracts you can have because you're risking the same amount or less because it's closer. That's why these are always the better trades the closer you get to this because you have a bigger position size. The bigger the position size, the more money you can make. All right? So let's see what happens here. Price drops. We have fully accepted the risk. So I'm not moving to break even or nothing. I've fully accepted the risk. Otherwise, you'll get stopped out like this sometimes, and then price turns around and goes downwards from there. You don't want that. You don't want that to happen. All right, right here. Boom. Gold coin. So what do we do at this point? We're $528 in profit. Okay. You can decide if you want to take some partials. You could full close here. If you're going to go from gold coin to gold coin, you could full close. You could hold your full position and enter more when the market comes back up to the cloud. Again, risking making nothing, but if it continues, then you make a lot more money. This is where you decide how you like to trade. For some people, they're going to want to just full close at this point. You got an awesome win. You hit the gold coin. That's the jackpot, right? Like the only thing better than that is the diamond, which follows usually shortly after the gold coin if price continues to push hard. And you've done fantastic. So you decide what you're going to do when you hit that gold coin, whether you full close or whatever. I'm going to leave this, okay? I'm going to leave it. And I'm gonna look to see if price comes back up. We're gonna go break even here. I'm gonna leave it, and I'm gonna see if I can get another position. So see this right here. This is looking kind of flat. It's looking kind of flat. If I take a second position, you can see it's pretty close. But now I have 12 contracts in the market. If price continues down, I'll make money. Okay? So let's go break even. If not, I make nothing. So price comes up, hits a stop loss, and you can see here what happens after that. Price continues down. That is the risk you take if you trade that way. That's the risk you take if you trade that way. Now, in all fairness, if you look at this, I would not have added on this because my line is flat. That is not what we want to see. That's not what we want. This means it's a bigger pullback when I see that. When it's flat, that tells me it's pushing, okay? It's either going to go sideways or it's pushing. I want to see entries where it is pointing down. That line gives me so much indication of what's about to happen and and how dangerous the trade could be, okay? So I want to be entering when that thing is angled down. This went flat. I'm probably not re-entering anything. So let's go back and let's see what happens. Let's go back to this candle. Yeah, probably on the next one is where we actually entered. So right here, that's closer to the level we would have gotten in. So we already determined we can risk this much. We don't need to take any more positions on this, but we're already risking $400 or so on this. And then I'm going to speed it up. Now let's see where this comes to. Look at this. That's the difference between getting stopped and not getting stopped on this scenario. So it came back up, it tested that same level. All right. If you keep your stop loss, you just accept the risk and wait for price to push, like really push, like make lower lows and trend. You just hang, don't move your stop loss, and you hang. What happens? Now, look at this, guys. You see this? Do you see how this is now angled down and prices cross back, it crosses back over it? Those are re-entries. Those are re-entries right there, okay? So let's say we add to it. And now at this point, we can lower. All right. Although I don't even know if I would lower it at this point because I want to see it be pushing down here to these lower lows. Otherwise, you still have this likelihood of price pushing up, retesting, and then continuing lower. Just like this. So here, this does give another re-entry. It's a little bit, yeah, it's still valid for risk tolerance. Now this thing starts pushing down. This is when price is consolidating. Now, look at this. We almost pushed lower right here. Once we start going lower like that, and we've now tested this, now we might want to consider. Maybe now we go risk-free, right? All right. What is this doing? Tell me in chat, guys. Is this flat or is it angled down? Flat or angled down? Go ahead and put it in chat. Is it flat or angled down? Your best trades are going to be when this thing is pointing down and price shoots like way up here. It's up here, but that thing is still pointing downward. That's going to be the best trades. This right here, almost looking a little flat. Price continues down though, so valid. So you can see your trend ribbon. This thing is pointing down definitely. My white line is a little bit flatter, not totally flat though. So pointing down, valid entry. Price continues, and now look at this. Now we're in a trend, okay? Breaks the low, comes back up in here. This thing closes above. This is where you can decide. Again, I got to pay attention here because now we're like into 11 o'clock here. This trade is done at this point. It's done, okay? 484, I don't care what happens after that. I'm done, unless you're holding this position for the remainder of the day. But multiple opportunities. If you guys look here, look at this. This is why gold coin to gold coin is so good. Here's your gold coin entry, gold coin exit. Pulls back, gives you another one. Gold coin entry, gold coin exit. You could have hit this twice in here and made $1,000 with 6 contracts. That's really good. It's really good. So now price starts trending down. And it's just kind of doing its thing, back and forth, back and forth. And we're gonna continue on and wait here. These are the best trades. Gold coins and diamonds up near the red line, because look at all this opportunity. Here's your diamonds down here, by the way. There they trigger. So far, so good. So if we were $322 going into that day and we're up 436, let's say, you're up like 120 bucks overall. Okay, now we're just waiting again. All right, waiting, waiting, waiting. Okay, 5, 6. I'm waiting till about 7:30. Looks so far like it's gonna be buys. All right, here we go. All right, so you show up at the market 7:30 and you're down here near this. I am automatically taking a trade. So let's see how much we're risking here. So from where this is 300, yeah, so about where we are here. Again, this is where our invalidation lines is. We're just a little bit below that. So 328 could be a little bit more with this. Why not just hold it and see if it pushes down a little bit more, you can take another position. So keep some dry powder. At least you're in the trade if it does, and see it does. It pulls back on you. All right, and look what it gives us. So it gives us a diamond down in here. It gives a diamond, so we can increase our position. There we go. We're still only risking like 500 bucks if this thing goes to the downside. So now we let it play out. We don't care about our ribbon or anything right now. We just care about if it stays valid. And look at this, it gives a beautiful diamond down in here. This is why you keep dry powder, because you don't know. And this happens down here. Look at, you're in a position up here. You could be in such a big position down here if you're patient and you just wait for this stuff. Really nice. Comes back down to retest. So there is a level of support here. Buyers are supporting this area. And now we don't add, because look, we're still below our entry. So we don't add anything in here. We're not taking scalps. We're not doing anything. We're just still waiting, because until we get over this level right here in the market, this support level, until we break that, we're still sideways, potentially losing. But it looks like today that's not the case. So this is Wednesday, this is 8:30, and look, you're already $717 in profit with a diamond. Full close, you're done for the day. Okay? So we held. I got in here, I held. If you had taken it down here, my goodness, you crushed the market because you went from diamond to diamond. You are moving your account forward, ma'am and sir. You are crushing it. Diamond to diamond. Look at that. Beautiful. Wednesday gave us such a beautiful trade. All right. Done for the day. We don't even need to do anything else. There is a trader here. Here's an example of a losing trade. A good losing trade. So look at, closes below. This thing pulls back down below. This is nice and steep. I would absolutely have smacked that trade. And then look, right here, closes below and it goes flat. I'm out. Very, very small loss. Okay? If you took that at all. My advice to you is, if you catch a diamond trade like this, like if you went from diamond to diamond, 425 ticks, you're done. There's nothing more that you need to get out of this day. You don't need to dance through all this nonsense. You don't need to be taking these trades. Nothing. Nada. Nunca. On to the next day. So you're now up $1,100 some dollars for the week. Minus you had some losses, so minus 325. So maybe you're up $800, $800, something like that. This is again trading micros. I typically trade minis, not micros, but when you're starting out, you need to trade micros to get used to it. All right, plenty of signals popping. Again, look at all these gold coin to gold coin trades. This is like 7, 8 o'clock at night, and it's just popping. You know, you're selling. Look at this: win, win, win. This one, that's like a break even slightly. Win. Diamond to diamond right there. This one, there's probably a diamond. Yeah, this diamond over here, that's switched, so I don't know that there was a diamond up on this. There might have been, but diamond to diamonds in here. Gold coin to gold coin. Okay, let's dial in here. It's almost the next day. 5 o'clock, 6 o'clock. Coming up on 7 o'clock, and then I'll pause. 7 o'clock to 7:30. Here we go. All right, so I'm in. Price is 260 ticks from the line. That's a lot. I'm not really close to the line. You see this? It hasn't really had a pullback. Maybe a retest down into this area would be nice, but haven't really seen a pullback, so I don't necessarily want to get in this up where it's at. Maybe I say to myself, I'm up, you know, I'm up $800+ and let me sit on this and wait. And let's see. Especially, see this consolidation in here? That's a no-go scenario for me. I'm just not interested. So price starts pulling down. Let's see here. And I'm getting ready to pause because if it gives me a nice, you know, I'm looking for a gold coin, a diamond, something. Going back to the upside here. This is Thursday. Was there news on Thursday? There was triple red folder news. Yep. That's at 8:30, so that's coming right up here. 8:30 is where we would look to see maybe we get a nice wick to the downside. This does give a buy entry here, so if you were thinking to yourself, I'd like to get in and maybe catch a buy to the upside here, there was an entry here. Let's see what happens if we waited. Okay, so if you waited, price gives a dip, we're looking for a diamond or a gold coin, so right there. Boom, so here's our gold coin. Stop loss down below here. It looks like, depending on how you wanted to do this, when it's pushing down like this, you're probably going to get a diamond. It's probably going to push a little bit lower. Yeah, right there's our diamond. So now I'm in with a diamond. I've fully accepted the risk. If price continues down, we're just going to get out. Otherwise, we're going to watch and see what happens here. Sideways, but still didn't flip blue. Waiting, waiting, waiting. Gold coin. We're not adding anything. This thing is slowly trending down. I don't remember what happened on Thursday, actually. I genuinely don't remember. 9:18, 9:20. Okay, 7 minutes to open. 6, 4, 3, 2, 1. Boom. Okay, so here we go. We have gold coin up here was like $400, I think. So you could have gotten a bag there, gone from diamond to gold coin. If you didn't take that, let's see what happens. Starts to push back up. That's a really good sign. But it stops out down here if you didn't take it. So this is a perfect example of why you take profit at the gold coins. That's why. So this was actually a win. So this was not a loss, but I wanted to see what happens. So what was that? 1150 minus 300. So we'll just call it 800. Let's say you were up 800. And let's go back here to our diamond area right here where we would have gotten in. Let's see. Yep. Stop loss. And let's see what would happen differently. Oh my gosh, it actually look guys, the balance is correct. They fixed the replay thing. That's such good news. Let me speed it up a little. Okay, so we're going to sell half our position once it gives us that gold coin. So there's gold coin right there. So we sold half of our position there. The rest we can, or the remainder, we can just see what it does here. I stay in. Pushes up, no diamond. At this point in the trade, you have a decision to make. Once you've reached this equal high, if we're paying attention and we see this and it comes back up to this area of resistance where price sold and it comes back up to that and it rejects, guess what it's going to do? It's going to push down, and it could come back down to our level here, or it could go all the way down. This is why you want to go break even here. We've made money. We don't want to lose money. If it does come in here and it gives us something that's tradable, then we can take another entry at a better position. But that equal high right there, once we come back to that, I don't want to be in that anymore. Risking. So now it's switched, selling. This is at 942, so potential to take a entry here if it pulls back. Otherwise, if it hits 10 o'clock and there's no pullback, we don't want to be in that. Right here, see this? This is a beautiful trade. So let me see if I can hit this right here. All right. This is a good looking trade. So this is pointing down. It's kind of steady trending. Did we want our put our full position in the market? Maybe not full position. So let's see here. Our first one was 6. Let's just stick with 6. Let's not load up on this. Okay, let's see if we get a push down. Nice. Now, what have I taught you guys about equal lows? When you come back down to that equal low, there's sellers here. That's why the market turned around in the first place. So when you get down here, you're going to take half of your trade out of the market. Okay? Take half out. Go break even. Risk nothing. Now you've made money, you're risking nothing. Right here, look what we have. It crosses over it again. I'm going to take another trade. Okay? I'll take another trade. Price pushes back down. Again, back down here at the equal low. Maybe I offload some of my position. Maybe I even do a full close down here. It depends on what you're going to do. When I see this and I see price push down, reject again, and then I come down and I reject again, I'm probably done and out of the trade. And it's now 10 o'clock, so I'm done anyways. Price looks like it reverses here maybe. Yep. There you go. Wisdom. Level of support. Take profit. You guys see that? Price rejects, turns around, rejects, turns around. Even if you take this sell right here, it looks good. Take profit here. Go break even or full close when you see that kind of stuff happening, okay? Job is done. Now let's go to Friday. So now final day, Thursday, coming into Friday. I have to give it a minute. All right, what do you guys think so far? Are you following along? Are you starting to catch the gist here? Taking these big gold coin to gold coin moves, diamond to diamond moves. Closer to the line, the better, because the larger your position you can have. You can take these other ones. You just have to lower risk. Look, again, this is, again, win, 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 win. Gold coin to gold coin in the direction of the overall direction. Win after win after win. You just got to lower your risk. All right, there's midnight. I'm just letting this thing paint until the morning. There you go, diamond to diamond. This is 1 a.m. in the morning, so people who are overseas can trade during this time. Gold coin to gold coin. There's profit. All right, 5, 6. I'm gonna get it to right about 7:30, and then get right into it. Price is selling, and we're close to the red line. So it's selling, and we're close to the red line. Now maybe I don't even want to wait. It's 200 and something ticks. You see, that's too much risk. It's too much risk. So I'm not gonna trade that. Let me go back here because we wouldn't even be in that in the first place. Too much. Wait for a pullback. Or wait for the ribbon to give you what you want, and then you could get in there for a potential position. For me, I'm looking for this kind of stuff. This is really, it's so far from our line here. I want to be within maybe 100 ticks. 200, 100 is up here. I'd really like to see like a nice push up into this area. So this is Friday. Now, this is where you can take these trades from, okay? So if you don't have a nice push and you don't get a gold coin or a diamond, but you get an entry, like a scalping entry from here. So like say price pulls back and it's pointing down and price rises above it. And you take that, you just take it and you go risk-free on it. You don't need to risk anything because if it's going to give you a push higher, it's going to give us a better entry. So you just go risk-free if it gives you one. $8.22. Here we go. Here comes potentially $8.30. Okay, so here's news. Big push up here. Now, do you guys see on this? I want you to notice this. Regardless of this being the news, do you see how prices point this? Or sorry, not price. You see how our ribbon line and my white line, they're both pointing down. Even with this news pushing way up here, you could have entered at a small position on this news candle. And if it's small enough, you can hold it. If it pushes way up, you can hold it because you're still risking the same amount of money. You could have gotten in on this. So this would have been an entry as this thing shot up in here. You could have taken something and immediately been in profit. Now, let's just assume that you didn't do that and you're just trading as a super beginner and you didn't get in there. Let's see where the next entry would have been. Right here, is this pointing down? What is this doing? It's kind of pointing down. I would say this is still sellable. So let's say that we get in this and we take 6. If it turns against us, let's see, 15 contracts max. This thing is already pushed up so high, so depending on where you got in on this, let's say that we did 12 contracts. No, let's do less. Let's just stick with 6, just for the sake of it. Price pushes back down. You're almost down at this equal low, so remember, this is beautiful entry. Price pushes down, this equal low. Maybe we want to take some profit down here, okay? As price pushes. Now, do you see this, guys? This is exactly what I'm talking about. Price is pushing up, but look at our trend down. Let's add to it. Why not? There we go. Boom. This is what I'm talking about. If you're a scalper and you want to take some big trades in a short amount of time, you see this, okay, where price pushes above your ribbon and that bright line in the ribbon is still pointing way down like that. Smack the crap out of that trade. You take it every time because you're so close that if price pushes over here and closes above, you can just get out. But you're going to get trades like this where you go 3 candles deep in profit almost immediately. All the time, you'll get this. So price pushes back down here to the low. Let's take a little money out of the market, okay? And then let's let the rest continue to just run. And see what happens. Kind of going flat here. Let's see if it gets some momentum again to the downside. Price never closes outside the cloud there, just continues down. And now you're making lower lows. Lower lows, lower lows, lower lows. 918, 917. There we go. There's a diamond right there. You hit a diamond like that, you full close. Done. Done for the day. Beautiful, beautiful trade. Multiple entries on this. 1, 2, 3 re-entries on the trend that were viable. This was great. This is great. All right. And there you have it. We're going to finish this out, and you can see here the what the win-to-loss ratio, how it would have played out for the week. You would have been up $2,300 for the week. It actually did calculate those first losses. The 330 was calculated in that. I didn't even catch it. So this is like, genuinely accurate for that contract size, 6 contracts. Which on this, I would be, when I'm taking trades like those last few that you saw, I'm loading up all the way. But I'm being conservative here, just for the sake of being conservative. All right, and we are almost at the end of the replay here. So let's take a look. And then we'll do Q&A. There we go. We had a 66% win rate. Remember I was telling you guys it's about 70 to 75%? So this was 66% profit in cash, 23,335. And we will, let's see, I'm going to print screen, FN print screen, copy. That got that. And then you can see here, performance report shows you 21 total trades, 66% profitable, profit factor of 14, average trade was $111. Average number of bars in trade, 26 minutes was the average trade. 26 minutes was the average trade. Max drawdown was $378. So another hoorah for Pathfinder. That was fantastic. So good stuff there. All right. Did you guys enjoy that? And look at this. We made $10 while we were doing the call. We're sitting $10 in profit right now. Did you guys enjoy that? We can lower our risk on this, by the way. You can see how it's moved up. So we're actually now risking less. And right there we can see. If you're really curious, what you can do is you can measure 275 ticks, and if you want to know how much you are totally risking, take off instant orders, and if I buy, there we go. So see this stop loss, 275 oh, no, I accidentally opened something else up. I have no idea. 275 ticks. You're risking $137 per unit. 137. So whatever your max risk tolerance is, you just add that, and then you can risk that much, and then you can monitor it. Like for example, if you were to wake up in the middle of the night or something, and this blue line is moved way up, your stop loss can go below that, and then when this blue line gets above your entry, congratulations, you're completely risk-free at that point. That's the way that it works. Which is rare for that to happen during a trading session, but you could see here, if you took an entry back here, this moved down below it by 11 o'clock all the way down here. Now by that point, obviously, you're not just going risk-free, you're closing, but gives you an idea. So anyways, I'm going to add one more position to the market. We're going to see how many ticks is this to the top, 682. Take profit, 680. That would be making $340. And I'm going to buy, there we go, second position. And it automatically gives my stop loss down here, automatically puts my sell limit up there. And you can set it and forget it, just like that. Okay? All right, what questions do you guys have? Did you enjoy that? Let me see some diamond fists in the chat. Give it that Pathfinder. Throw a couple rockets in there. You gotta love it. All right, why didn't trade before 8:30? You took a news trade long when we were live, and cut on the way down. I can't speak up as we're going along. I'm muted on your side. So why didn't trade before 8:30? Took a news trade long when we were live and cut on the way down. I don't remember. And sometimes I do wild things. I always joke around and say, like, there are people who are going to make more money than I do with Pathfinder because they're actually going to trade Pathfinder like exactly the way you should trade it. And like, you guys don't have bad habits to unlearn anything like that. You're not going to take wild trades, and you're just literally going to follow what you need to follow with this, and you'll do fantastic. And I always challenge people. I'm like, look, if you can do better than I do with this, it makes me nothing but happy. Like, it overjoys me when you guys succeed. I just love it. So that's the basis. I've got this recorded. I'm gonna stop the recording now, and another awesome, successful week with the Pathfinder.